happens when an entire continent needs massive amounts of metals, but struggles to produce them itself. Well, you start investing in the companies that will find them somewhere else. And right now, some of the most aggressive investors in mining aren't even coming from Canada. They're not coming from the US, they're coming from Europe. And they're deploying capital into projects all over the world. But why? This is The Market Knowledge. I'm Lyndsay Malchuk, and today we're looking at why the European investor base has become one of the most strategic forces in global mining. You see, Europe is facing a complicated economic moment. Growth across many European economies has slowed, manufacturing has weakened, energy prices surged after the Russia-Ukraine conflict disrupted gas supply, and industrial sectors that depend heavily on metals are under pressure. And at the same time, Europe is pushing aggressively into electrification, renewable energy, and advanced manufacturing. We're talking electric vehicles, battery storage, grid expansion, defense modernization. All of these industries require enormous volumes of copper, lithium, nickel, rare earths, and other critical minerals. But here's the challenge. Europe produces very little of the metals it needs. Permitting for a mine can take more than a decade. Environmental regulations are extremely strict, and local opposition often delays projects indefinitely. So Europe's economy is moving towards technologies that require massive mineral supply, while the continent itself struggles to develop new mines. That gap has created a very clear investment response. European investors are not waiting for the mines to be built at home. They're investing in the companies building them abroad. Canadian exploration companies, South American development projects, African companies, Australian resource plays. Because if Europe cannot produce the metals domestically, European capital will fund the mines somewhere else. This is not speculative money. This is strategic money. Family offices, commodity funds, industrial-aligned capital, investors who understand that the next decade of economic growth will depend heavily on access to raw materials. Now, there's another layer here that goes beyond simple economics. It's about security. Across Europe, governments and institutions are increasingly focused on critical mineral independence. The continent is trying to reduce reliance on dominant suppliers while securing long-term access to the materials essential for energy and technology supply chains. The result is a major push towards what policymakers call strategic autonomy, and investors are responding early. They're backing exploration companies, development projects, and emerging resource districts long before those projects ever reach production. Because the companies discovering the next generation of deposits today will be the ones supplying the global economy tomorrow. Now, for mining companies, this shift matters, and I'm going to tell you why. Traditional mining capital markets have become tighter and more selective. But European investors are increasingly looking globally. They want exposure to high-quality deposits, they want credible management teams, and they want projects that could play a role in the next generation of global supply chains. For companies that can demonstrate strong geology and a clear development path, European capital is paying attention, quietly, strategically, and often earlier than many investors realize. Because the real story here is not just about mining. It's about the future of the global economy. Europe understands something very clearly. The next industrial era will be built on metals, and if those metals can't be mined inside Europe itself, European investors will make sure they own a stake in the companies discovering them somewhere else. And here's the real question I'm going to leave you with. If European capital is quietly positioning itself across the global mining sector, what do they see coming in the next resource cycle that the rest of the market has not fully priced in yet?